back Peloton and you have bought back Corvo, and I want to know why.
I also bought back some of the clean energy plays. Here's why. I perhaps got too negative last week when I started to take down exposure. And as I thought about what's transpiring this week, and particularly focused on the debate, looked at the latest results from the polls, it seemed to me that the market has been digesting, given Biden's movement in the polls, consistently having a spread of 7 to 9% above Trump, even in a lot of the swing states. So I thought that the debate was Biden's to lose, and knowing where Trump was going to come from, he was well prepared. And I think that's what we got. I did not count on the risk to my negative scenario was also stimulus. And I did not count on the positive news on stimulus that we got overnight and this morning, which reversed the futures. So, look, so the other factor was that the government had come out and said, hey, we're potentially going to blacklist SMIC, the largest chip manufacturer in China, then backed away from that. So that was sort of a doomsday scenario for technology. So I bought Corvo back. The stock had corrected. Peloton had corrected back down lower. It was down 5 points early in the week. I bought it. Momentum continues. I keep track of what their wait times are on the treadmills. Now it's out and through, through another 2 months. And forget about the bike. You can't get the new bikes. So it's positive on the fundamentals there. In terms of the clean energy plays, those stocks have been moving very, very well. I've gone back into them, as I mentioned. The reason being is that it's not only the U.S. that's after clean energy, it's also the rest of the world. And when you take a look at managers, active managers that need energy exposure because they basically try to mirror the index, right, you can get it out of clean energy. It doesn't have to be fossil fuel. So it's all fundamental reasoning that I did it. But now I think after last night's debate, that it's clear sailing through the election with some volatility.
Okay. So, Joe, you've sold the VXX. John, you've been shorting November volatility. That says to me the trades may be different, but the narrative that you're trying to express is exactly the same, that you expect less volatility, Doc, than maybe some had been predicting. Maybe you thought that was a little bit overdone?
Yes, exactly, Scott. And I've tried to bring that across here as well, that we thought that November and December vol was too high, given that the things that we do know. Now, there's always things we don't know, so I'm not pretending to know everything, of course. But I'm just saying, selling that higher vol, Scott, and being long further out in time, whether that's through a diagonal spread or a calendar spread, I think both of those work, and they have been working because the vol has been coming down in those. Now, I'm not saying it's flattened out at all, but I am saying that it is still elevated, and that there are a lot of technicians that I respect as well that are talking about this same sort of trade right now. In other words, I don't think that it'll take all the way till January before we have a definitive candidate that has won in this election, whichever way that goes. And I think thus the volatility has been exaggerated in that November, December timeframe. Those are the ones that I'm short, long the further outs in a diagonal spread, or again, as we call it, a calendar spread or a time spread, Judge.
Yeah. Joe, again, you're expressing sort of the same view. You feel better about the market, it feels to me.
Sure. Volatility was a leading indicator in late August and early September for the 4-week decline. We got the 10.5% correction. Here we are now. We've got stability as we walk into October. I think the market probably trades in a range of around 3,300 to 34.25 as we approach earnings. But there's $90 trillion of global liquidity that is supporting markets. And we come in today, and obviously as a result of last night's fiasco, there are many extrapolating that the market should have been lower. But what did we get? We got an extension of this mosaic of coordination that has catalyzed this V-shaped recovery, Scott. It's been the infinite liquidity, as I just said, from the Federal Reserve, and it's been the fiscal support, the equivalency of 17% of GDP.
And maybe
that's
Joe,
ultimately what matters.
And maybe, Joe, to your point, at the the 11th, 12th, or 18th hour at this point, you're going to maybe get more stimulus, right? I mean, the Treasury Secretary was maybe more positive than people expected, with Becky delivering alpha to kick off our 10th conference this year. And now I'm reading on Twitter that, that the Treasury Secretary is going to have a face-to-face with House Speaker Pelosi. So maybe they're able to get something across the finish line, which I think, the hopes of that seemed pretty dim.
Yeah, and I think that supersedes the concerns as it relates to the election. It supersedes the concern as it relates to U.S.-China trade tensions. And last point, real quick, Scott. As it relates to Vice President Biden and the potential negative effect that he would have on the equity market, I truly do not believe that that is what the evidence suggests. Keep in mind, yes, you would have a higher tax consequence, both on a personal and a corporate basis, but there's an offset to that. There's the reintroduction of globalization. And what does that equate to? That means lower tariffs, and that means an environment where you have more potential fiscal spending. So I don't think it's the ominous scenario that's being communicated to the markets that is going to be perilous.